Have you ever noticed how things in life change the moment you get used to them? One day everything is fine, and the next day, boom, life flips the script. Just like that, what once felt stable is suddenly upside down. The constant change in the crypto market is just like life. It moves fast, changes direction without anyone's permission, and loves to catch people off guard, right? But what if you could see the signs of reversals or pullbacks or breakthrough before it even happens? In this video, I am going to show you how you can use a technical analysis indicator called the Bollinger Band and combine it with a strategy called the +2 and -2% depth on CoinMarketCap. So, like the legendary Bruce Lee once said,
empty your mind, be formless, shapeless, like water. Now you put water into a cup, it becomes the cup. You put water into a bottle, it becomes the bottle. You put it in a teapot, it becomes the teapot. Now water can flow or it can crash. Be water, my friend.
what you just heard also applies to trading. And in trading, it simply means stay flexible, pay attention, and flow with the trend before it ends. Okay, so stick around as we are about to break down this in a way that even your house cat could follow. Now, let's dive in. First things first, what is a Bollinger Band? A Bollinger Band is just these three lines you're seeing on the screen. Let me indicate it for you. This line, this yellow line, and this other line. Now, this line over here, the bottom line is called the lower band, and the yellow line is called the moving average, the middle band, and then this line over here, the top, is called the upper band, right? So Bollinger Band is a technical analysis indicator, right, that helps traders to catch moments of volatility. It helps traders to capture moments of volatility and also helps traders to see overbought and oversold condition. Right now, I'm going to explain what volatility is and what overbought and oversold condition is for the sake of the newbies that aren't that have not been following us in our past videos. Right now, volatility simply means the ability of a crypto coin to rapidly go up or down in value or price. Now, for instance, if BTC is trading at $100,000 at around 2 o'clock p.m. today, and then it suddenly drops to $93,000 in 30 minutes, and then within the next maybe 15 minutes, it went back to $98,000 and then went as high as $103,000, then that makes BTC a volatile asset. It's not stable, it fluctuates. That is what volatility means. Now, how can you be able to actually use this Bollinger Band to capture moments of volatility? Well, whenever the band shrinks, let me show you something. Whenever the band shrinks like this, okay, whenever there's a shrinkage in the shrinkage in the band, the moment the band begins to expand, then that means the low volatility is increasing to a high volatility, and low volatility is caused if there are no buyers or sellers that are interested in buying that asset. That makes the price to become stable, and if the price becomes stable, neither buyers or sellers are interested in buying, then the price, the band, the upper band and lower band comes together as if they want to shrink, okay, as if they want to contrast. So the moment buyers or sellers step in the market, the band will begin to expand. So we all know that in trading, low volatility leads to high volatility. For every moment of low volatility, which means for every moment of lack of interest from buyers or sellers, comes a high volatility moment. That means comes a moment where buyers or sellers step in. So whenever you see a shrinkage, okay, whenever you see a shrinkage in the market, the price will either move up like it just did here, or the price will come down. Okay, so that is just how you can be able to actually use this Bollinger Band. Can you see what I'm telling you about? Okay, this is a shrinkage, and then when the band began to expand over here, right, the price actually went down. Okay, the price actually went down. That is how you can use Bollinger Band to actually calculate volatility. Can you see what I'm telling you about? This is another example. This is a shrinkage right here, right? The moment the band began to expand, the price went up. Okay, and another use of this Bollinger Band is that it helps capture moments of oversold condition or overbought condition. So take for instance, let's say this band. Whenever you see price hit the upper band of the Bollinger Band, that means that price or that asset is being overbought. Overbought technically means that the price buyers have been in control for a very long period of time, and it is in its highest peak level, right? And at any moment the price wants to come down. So whenever price hits this upper band here, it will it is like a signal signaling you that the price wants to actually go to the bottom level. And whenever price hits this lower band here, it is considered as an oversold condition. An oversold condition is a situation or a phenomenon in the market where sellers are in control for a very long period of time. Don't forget, we are using a higher time frame. We are using the 1 day time frame. So each candlestick over here represents 1 day of activity, right? So when it hits this lower band, it is telling you that the sellers have been in control for a while, and at any moment buyers are going to step in and actually drive up the price to another overbought condition, right? So typically what the market does is it captures buy liquidity, takes it to the sell liquidity, captures sell liquidity, takes it to the buy liquidity. That is just what market is all about, right? So it's left for us to know when to buy low and when to sell high, or when to sell the asset when you're trading futures. Now back to the topic. Since we now know what Bollinger Band actually does, let's use this Bollinger Band to see if after a moment of low volatility, which means after a moment of lack of interest from buyers and sellers in the market, we are going to have a moment of high volatility. Now, how can you tell if the market wants to go up or down using this Bollinger Band? Okay, so after a shrinkage, all right, after a shrink, just like this, after this shrinkage here, assuming this place over here has not formed yet, how can you tell that after this low volatility the markets want to actually go up or wants to actually come down? Now this is where coin market cap plus 2% and minus 2% depth come in, right? This strategy might look ordinary, but it has the power to show you who will be in control soon and at what point the market will turn. Okay, now first things first, what is plus 2% and minus 2% depth? Plus 2% and minus 2% depth shows how much money in the market or in buy or sell orders that is sitting close to the current price of a coin, specifically within 2% above or below that price. Let me repeat this one more time. Plus 2% and minus 2% depth shows how much money in buy and sell orders that is sitting close to the current price of a coin, specifically within 2% above or below that price. Now, the plus 2% depth is the total value of sell orders. Please, I want you guys to pay a very close attention to this, because I get a lot of questions from people getting misunderstood when the plus 2% depth and minus 2% depth is involved. Some say the plus 2% depth are biased, so whenever I see plus 2%, I buy or sell. Well, I am going to explain everything in details in this video. The plus 2% depth is the total value of sell orders placed up above higher than the current price, while the minus 2% is the total value of buy orders placed 2% lower than the current price. Don't get confused. I know what I'm doing. Don't get confused. I'll explain it. I'm going to scratch everything for you. Now, the questions I normally get from this confusion, I quote, you see people saying, I thought plus 2% is the total value of buy orders since it has plus, and minus 2% is the total value of sell orders since it has minus. I've done like 2 videos on this and people still don't understand how it works. And it's a great question actually. And it is totally understandable why it feels that way. But it's actually the opposite, guys. And in this video, I'm going to explain it in details for you, okay? I'm going to explain it just the way I explained it to my students. Now, the reason why the plus 2% depth shows total value of sell orders and not buy orders is because sellers place order 2% above the current price to sell at a higher price to make profit. And on the other hand, the reason why minus 2% people shows the total number of buy orders is because buyers place a buy order 2% below the current price of the asset, hoping to buy it when that asset gets down below 2% so that they can buy the asset at a cheaper price. Okay, let's get to CoinMarketCap. But before we get to CoinMarketCap, I want you to notice something. Okay, now this is Solana USDT, right? And on our Bollinger Band, we just saw that the price has hit the upper band, indicating that it has went to its overbought condition, and at any time the market wants to go down to hit the lower band. Okay, now since we know that the market wants to go down to hit the lower band, how can we tell if it's actually going to go down or buyers will pump it back up? Now let's get to CoinMarketCap. So guys, we are now on CoinMarketCap and we want to analyze the plus 2% depth and minus 2% depth of Solana, right? So this is Solana right here, sitting at number 6 on CoinMarketCap. Right, this is Solana sitting at number 6 on CoinMarketCap. All we have to do is to click on it. When we click on it, it's going to lead us to this interface of Solana that entails the market structure, the news on Solana, the market at which Solana is being traded, and so on and so forth. Now, if it loads up for you, this is the next place you are going to click on too. All right, so you just click on market. All right, remember we are using Bybit, so when it gets to the market that this Solana asset is being traded, you don't use any you only use the interface that you are trading on, right? Because different markets or different platforms have different markets and different values and volumes at the same time. Now, since we are trading on Bybit, okay, so we are going to focus only on the plus 2% and minus 2% of Bybit. Now, all you have to do is to hold on our screen and just move the market to the left, just like this. Now let me do it. Okay, so we have moved the market to the left, and as you can see, there's a region or a place where you're going to see plus 2% depth and minus 2% depth. Okay, now this plus 2% and minus 2% depth are what we are talking about. Now, plus 2% depth on Bybit has 2,642,000, and minus 2% depth have 4,179,000. Now, this plus 2% depth, listen attentively, this plus 2% depth are the sellers. Okay, they are the sellers. These people want the market to go up by 2%, so that if it gets up by 2%, they will have profits and then place their sell limit order and drive the market back down. Okay, because whenever they sell their asset, the value of the asset is going to reduce, and if the value of the asset reduces, it will make the price to crash. Okay, for instance, this Solana, it's been traded at 167, right? Now, this is the current price. Okay, this is the current price, 167. So if Solana were to move up by 2%, okay, it will trigger the order of these sellers that have placed their asset, that if Solana move up by 2%, the market should automatically put them in. Now, this $2.6 million that is resting 2% above the current price, that is owned by sellers, is going to get triggered the moment Solana gets above this price by 2%. And if it gets above this price by 2% and this order gets triggered, it will make the asset, or it will make the value of Solana to go down, because sellers have sold Solana to get USDT. So since Solana is being sold in a very high amount, or in a very huge amount, it will make the market to actually go down. Okay, it will react to the market to go down. Now, these sellers want the market to go up by 2% so that they can sell and make the market to go down. And on the other hand, the plus 2% people, or the minus 2% people, so these people, the minus 2% people right here, are the buyers. Okay, these buyers are waiting for the price to go down by 2%. If the price gets down by 2%, it will automatically trigger this amount of money that is resting, which is 4.1 million. Okay, it will trigger this limit order. It will trigger this limit order to actually make the market to pump up. So now, if this current price of Solana, this 167, were to go down by 2%, it will go and grab this liquidity of money that is resting by these buyers. And when it grabs this money, then that means more Solana or more USDT is being pumped into the market to get Solana. And if buyers actually get hold of that Solana, it will make the value of Solana to go up. If the value of Solana gets back up, it will increase in price. And there's something you need to know: the market always respects people with high money. The market always respects people with high money. Now, the sellers, which are the plus 2%, okay, the sellers, which are the plus 2% people that want the market to go up so that their order of 2.6 million can get triggered, have a little less money than the buyers, which are the minus 2%, that wants the market to get cheaper, that wants the price of this Solana to get cheaper, so that their 4.1 million can get triggered. So the market will automatically respect these people. Okay, but there's something that a lot of people don't know, and this is where I'm going to explain everything. Now, this 4.1 million you are seeing are all limit orders, and this 2.6 million are all limit orders. And as we all know, there's limit order, there's market order, right? Binance, Bybit, Coinbase, Upbit, Bitget, and so on and so forth, they only calculate limit order because they don't have the power to know who wants to use market order. Market order are a set of people or are people that just get into the market and buy an asset at its current price immediately. So there's no way Binance or Bybit or any other trading platform can be able to know who wants to buy coin immediately. All right? I hope you're understanding. So because of that, sometimes you're going to see that the people that have more money in the market at limit order, instead of the price to respect them and get to their come to their aid, the reverse is going to happen. You're going to see that. Let me give you another example. For instance, now I want you to assume that these are the set of buyers, okay? These are the buyers, and then these are the sellers. So the buyers are the -2%, while the sellers are the +2%, meaning that the buyers want the market to go down by -2. The buyers want the market to go down by -2% so that they can buy at a cheaper price, while the sellers want the market to go up by +2% so that they can sell at a much higher price and make profits. Okay, now considering the fact that the buyers, based on what we saw, the -2%, which are the buyers, are more in number, right? They have 4 million based on what we saw on CoinMarketCap, if I'm not mistaken. So they have 4 million, and then the +2%, which are the sellers, have 2 million. And we know that normally the market always respects the people with high amount of money. But I want you to know that this amount that you're seeing right here, this 4 million that you are seeing right here, have not actually got liquidated into the market. It is still on limit order. The market only reads limit order, it doesn't read market order. So also this 2 million here has not got into the market. Now if some of these buyers right here decide that anyway, I don't want to even trade this asset anymore, they have the right to remove their money out of this 4 million. So also if these sellers right here that want the market to go up by 2% change their mind, they have the right to actually cancel their order, since it's not at market order, it's at limit order. So what I'm trying to say here is that market order is more reactive to price action. Market order is more reactive to the movement of price in the market than limit order, since this ton of money sitting here is doing nothing unless the market actually goes down by this 2% before this order gets triggered. And this 2 million staying here is doing nothing unless the market moves up by 2% before this order gets triggered. Okay, so what we know is that for people to actually place 4 million, okay, let me clear this so that it can be a little bit understandable for you guys. So for people to actually place 4 million, okay, tending for the market or hoping for the market to move down by 2% so that their buy order can get placed, and then they can move up, okay, in price. It means that these people, which are the buyers that have the -2%, have already made their analysis, and they have seen that the market wants to go down. And if you haven't forgot, you are going to remember that using our Bollinger Band, the market has actually hit the overbought level and it's on its way to go down. That means the buyers actually know what they're doing. They know that the market wants to actually go down. Okay, but how can you be able to tell that indeed this market wants to actually go down? There's the easy way and there's the technical way. But in this video, I'm going to actually show you the easy way. The easy way is that you know that the market wants to go down. It's left for you. You can place a sell order, right? But aim at least 1.5%, because since these buyers here want the market to go down by 2% before their buy order of $4 million get triggered, then that means the market has to go down. Okay, they have analyzed that the market wants to go down. You can place a sell order at 1.5% to be safe. When it gets to 1.5%, you have made your profit on futures, since it doesn't work. Selling doesn't work, or selling is not profitable on spot, right? Or you can wait. Okay, you can wait until this 2% gets triggered. When the 2% get triggered, you can then use buyers or align with the buyers, okay, and then make the market to go up. Right now, how can we be able to tell? How can we be able to tell that this market right here, the market on Solana, actually will go to the direction of the people with $4 million? Because sometimes, even though the buyers that have +2% depths, even though they have much more money in the market, sometimes you're going to see that the sellers or the market become respectful to the sellers and ignore the buyers. Now that is because more people at market order are coming into the market to actually pump the price up above. More buyers are coming into the market, and if more buyers are coming into the market at market order, let me show you something. Now these are the buyers, right? and then these are the sellers. And the sellers want the market to go up 2% to sell. Now, if more buyers come into the market, right, more buyers come into the market to stack cash. Now, the plus 2%, or the plus 2%, the sellers are going to start getting happy because the value of Solana is going to start getting appreciated, right? The value of Solana is going to start going up. And if the value of Solana starts going up, it will start to respect this plus 2%. Right, it will start to respect this plus 2%, and more market order buys, more buys on market order is equal to more opportunity, or more opportunities for sellers, of course, for the market to actually go up by 2%. So it does not always mean that if the market, or if more money is being pumped by the buyers that want the market to go down by 2%, just because they have $4 million in cash sitting at limit order, and these people have $2 million in cash, it doesn't always mean that the order of these people will get triggered before this one. It depends on who are coming in at market order to buy or sell. Now, how can we know who are coming in at market order to buy or sell? Now, there are two ways in order for you to know who is in control in the market at market order. All right, the first way is to actually wait for whoever trigger want to actually whoever order want to actually get triggered. You calculate 2% above the current price and write it down, calculate 2% below the current price and then write it down, then place alert on both. Place alert 2% above the market price and then place alert 2% below the market price. Whenever the buyers get successful, the market will drop by 2% and then actually make you to to execute your trade and then buy, so that the market can take you up. And then whenever the sell orders get triggered by 2%, it's going to alert you, and then you can be able to place a sell order on limit, and then the market is going to actually go down with you. Now, the second way is to actually detect a change of character. There's something called change of character. When the market is making higher highs, okay, and higher lows, higher highs, higher lows, higher highs, higher lows, and then it went to a higher high. Instead of making a higher low, it made a lower low. Now, this is your change of character. Some people call it market structure shift. And then it made a lower high, lower low, lower high, lower low. That means the market has moved from an uptrend to a downtrend. Okay, now if you take a look at what happened over here, the market made a higher high. Let me draw it. A higher high, higher low, higher high, higher low, higher high. Okay, and then made an equal low. Okay, and then made another higher high. This time around, it made a lower low, lower than this place right here, as you can see. Then it made a lower high, now a lower low. It means that there is a change of character over here. All right, there's a change of character over here. That means the market wants to continue to go down. In this case, we can say that the buyers that are hoping for the price to go down so that they can place their buy order, their order is going to actually get triggered. All right, so now all we have to do, since Solana, as you can see, as I am on a profit of $2 because I've actually made this analysis a while ago, and I've seen that the market will actually continue to go down. If I am to get into my trade session, let me show you. If I'm to get into my trade session, you're going to see that I am at 8% profit right here, and I'm just using $30, just $30, and I've made $2 already. And take a look at something, guys. I'm using just 3x leverage, just 3x leverage. So I'm not getting greedy in the market. I'm not using 10x, 20x to actually get something from the market. I believe in getting small, and I believe in the power of compound interest. I compound my money until it gets large, right? So back to the topic, right? So when you get to this level, you just wait for the order to get triggered. Now, 2% below the current price is where you are actually going to take a break, because you know that there's money resting at the minus 2%, which is the buyer section, which is the demand section. There's money resting over there to make the price go up. There's at least $4 million based on what we've seen on CoinMarketCap, right? So all you have to do is to calculate 2%. Let me show you how to do that. So the current price of Solana is 167,930. So put that in mind. Now on our calculator, all we have to do is to calculate 2% below the current price of Solana, which is 167.930. So all you have to do is 2 divided by 100. It's going to give you 0.02, right? Multiplied by 167,930. Okay, so it's going to give you, 167.930, pardon me, 167.930. It's going to give you 3.3586. You just write it down. All right, now the current price, which is 167.930, you're going to minus this 167.930 by 3.3586, right? So 167.930 minus 3.3586. So that means the buyers want Solana to get to at least 164.57, okay, before their $4 million get triggered and then push the price back up. So you have two choices. It's either you get into the market now on futures level, okay, on futures trade, and then calculate 1.5 and highest 2%. Just calculate the markets to 164 point maybe 6 or 165, somewhere within that place before the buy orders get triggered. Or you can wait for the markets to reach up to this 164.57 before when the order gets triggered. You can just look for a bullish signal. You can look for a bullish signal at a lower time frame, maybe like the bullish engulfing candlestick, or the harami, the pin bar, or the hammer, that will actually validate your move to the upside. You already know that the plus 2%, the minus 2%, which are the buyers, have successfully made the price to go to this level of 164.57 that they want it to go, and now their orders want to get triggered. So you can just place a buy order either on spot or futures to actually make your trade go through. Now, the next thing you need to know is to know that the market always goes from one side of liquidity to another side of liquidity. When the market goes up, it actually goes to grab liquidity from the upper area of the market, and when it comes down, it actually goes to grab liquidity from the lower area of the market. Liquidity is just all these long wicks you see, right? That means there's market over there's liquidity, there's money over there. Now, this 164.57, all you have to do is there liquidity at that area? That's what we need to know next, right? So let me just see. Using this my cursor, I'm just going to drag it to 164.57 and then go back to see if there's liquidity at that area. All right, 164.5, somewhere around this place. Now, as you can see, there's actually liquidity resting over here. Have you seen it? There's liquidity resting over here. Let me show you what I mean. This is 164.5, right? Now this is the liquidity resting over here. That means indeed, if the market gets to this low, it will actually go up, and as you can see, it is in alignment with the lower band of the Bollinger Band. Can you see? So if the price hits this place, it will actually tend to go up and to satisfy the orders of the buyers. I hope this video helps, and if you are having a hard time to understand it, you can actually enroll in my mastery class and get a better understanding of how this actually works. I hope you have a nice day.
Trading will break you. It will test your patience, drain your emotions, and push you to the edge. You will cry. You will doubt yourself. You will wonder if it's even worth it. But if you survive, if you keep pushing through the pain, one day you'll wake up and realize you made it.